All right, traders, George here, and time for a look at copper. I don't look at copper that often, but something caught my eye, and I thought I would do a video to show you some things that I'm looking at and some things that you can look at if you're using the balance beam model specifically. As far as copper goes, this is one of these metals that's talked about in a fundamental way, in that a correlation is attempted to be made between copper use, copper sales, and the supposed health of the economy and what that might mean going forward. So let's start out with price first. Copper here has been in a bear trend for the last 700 days. Okay, we're lower on the right than we are on the left. As far as trading commitment goes, a lot of it is in the very low threes, and we're below all the heavy commitment, so that's even more bearish. Recently, copper tried to break over this 335 ceiling here to this balance beam, and they just couldn't get it done. It was a perfect go at it, and then they just let it go a few days later. So that was real weak. And then the follow through here, new lows, outside return, finding resistance right on the dominator. That's about as ugly as it gets. Sharp drive down, not as much commitment below until they find this spike right here. This is an interesting little point here, in that that's about where we are right now. So we broke pretty convincingly below that. Tail pushing up shows some buy pressure there, or short covering. Price staying over this level, that gives the bulls a little foothold, although today they're pressing right back against. This is an area to watch for a further catalyst in copper. And even in, regardless of what it does in the coming months, if price is in this region, this will be an important price point to watch. We're at 29,625 right now. If the bulls can keep it north of this zone here, and you can watch 3 as a round number for further strength, they've got a good shot at filling back into this zone here, but watch for overhead resistance, and that's something to be expected. Okay, just like I showed you 1390 in gold is key overhead resistance, dropping $100 essentially. That's the same deal here with copper. Now, if we break below this balance beam here, which we already have, if we break below, trade below, and a confirmation making a new structure low altogether, then copper is in much more trouble. So here's the continual futures on a monthly chart here, and you can see how important this commitment zone is. The odd thing about copper is that it was trading in the pennies 10 years ago or so, and then it just caught on like wildfire, like a momentum stock almost, and then had a big crash, made some new highs here, and here it is right now. So as far as this chart goes, it's got a lot of warning signs in terms of just being a sort of a parabolic rise up and then some crazy oscillation following it. We don't see this too often, but that's what's happening here. And if you look to the left, there's really not a lot of commitment until you get down to the low twos, 220, 210s, in that neighborhood. So momentum moving downwards is going to have a hard time stopping until the low twos. Okay, so that's another 70 cents lower than where it is. But here's the issue with copper, and I don't advocate trading copper. It's not a good trading vehicle. If you want to trade the metals, go trade the big contract GC gold. Okay, you need liquidity, and you're not going to really get that with the copper market. You can position trade it if you want, but there's really no attraction to doing that. Most of the people that are position trading copper are making fundamental suppositions about what price should do, and they're typically getting that wrong. By typically, I mean about 90% of the time. Here's a chart of copper, continual, and overlaid on the cash S&P. So one of the suppositions about what copper infers for the market is that with copper going up, that's good for the market. But you can see here in 96, we're trading lockstep right here at the same price point, and then the S&P goes up from essentially about 600 up to 1550, so about a 2.5 times increase in the entire S&P, while copper moves down for several years. That right there should have you never supposing that price should do anything relative to copper. But unfortunately, that's not the case. People will still insist on doing it. Here, copper is relatively stable, and the market falls in a huge way. Again, that should have you never supposing what price should do based on copper. Here they both start to move up, and here they both start to move down. Okay, they're moving in lockstep there. They're not moving in harmony at all right there. Here, off to the right side, we have copper moving up and continuing to move up as the S&P goes into its sharpest correction that it saw since the bull market took over. And now, since the S&P's gone on the second leg, look what's happened with copper. Copper has continued to move down for the last several years while the market's made new all-time highs. So this again should have you never supposing what the market should do based on copper. And if you're going to tie this into the economy, then that's yet another level that has nothing to do with price. GDP has nothing to do with price. Earnings have nothing to do with price. Jobs, taxes have nothing to do with the market. All that the market has to do with is price itself. And the only supply and demand that's important is the supply and demand of the price for the market that you're trading. So that's the end of it. There is absolutely no other way you can slice it. However, every day you're going to see inferences about what copper is doing and what the market should be doing or what it might imply. And that is just an absolute wheel spinning dead end. So if you can't get it from that, you're going to have a real hard time. Maybe you want to replay the video, but that's all there is to it. The market has gone up wildly while copper's gone down. It's gone down wildly while copper's gone sideways. They've moved in lockstep together here, and then they've diverged here, and then yet again in the opposite direction. So for the last 20 years or so, the market and copper have only moved together for a handful of years, maybe a third out of the last 20 years. So why would you even want to suppose anything about copper relative to price when it would be in the minority of historical occurrences? It makes absolutely zero sense. So keep that in mind. If you want to be fair with logic, then this is how you can do it, okay? And if you want to really be fair, take a screenshot of that, flip it around upside down, and see if you make the inverse assumption. If your logic is correct, you will. Going back to pure price, though, this is obviously a negative move here for copper in terms of the health of price, and it's really sort of getting to the edge of the cliff here. It could see a much bigger drop down into the low twos. That would be the main target based on just the balance beam commitment. I won't even get into any fib or projections here for copper because frankly I don't care and I don't trade it, but I just want to show you the bearish turn here in copper where it could be going just based on prior trading commitment, and then of course the big kick in the pants relative to what the S&P is doing in copper. Obviously copper is going to do what it's going to do. The S&P is going to do what it's going to do. And at the end of the day, whatever market you're trading, all you need to do is ask yourself, what are your plans when price does X? All right, a little bit of honesty there for you in the copper realm. We'll see you back in the live room.